Hello, I'm Mai Forsman. I'm really excited to be here and talk about a few common mistakes to avoid when purchasing a new home.
Perfect. So we are so excited, like Mai said, to have the opportunity to share our knowledge with you guys today regarding some of the first-time home buyers' mistakes to avoid. Like you guys were told earlier, if you have any questions throughout the presentation, feel free to add those to the chat, and we'll get those questions as we go along. So I'm going to go ahead and pass things over to Mai to get us started with our first mistake.
All right, so the first mistake that you want to avoid is shopping for a home before shopping for a mortgage. And what that means is we know that looking at homes can be fun and probably more fun than getting your actual mortgage. But it's really important to get a pre-qualification so that you understand your purchase power. You don't want to set yourself up for disappointment, right? So you might be shopping for homes in the wrong price range, either too low or too high. And also, realtors will often not show homes to buyers who aren't pre-qualified. When you think about your pre-qualification, you don't want to go look at a home that is outside of your budget and love it and fall in love with it and want to purchase that home if it's not affordable to you. So you really want to make sure that you are purchasing or that you are looking for a home that is affordable for you. So here's a couple of tips. Talk to a housing counselor or mortgage professional to understand your affordability. Get pre-qualified. Is your pre-qualification amount higher than what you're comfortable paying? Communicate your budget with your realtor. It's really important that you want to get yourself into a home that's affordable for the long term. So before we go to mistake number 2, I'd like to pause and see if we have any questions. Looks like no questions. So Maisha, I'm going to go and hand it over to you.
Thank you so much, Mai. So mistake number 2 is not exploring all of your available mortgage options. So Mai just told us that before we start looking, we need to get pre-qualified. But don't stop with the first bank or lender that you get approved from. You do want to shop around. You could save a lot of money by shopping around. So for example, when you go buy a car, you might go to a few different car lots. You might look at a few different models of car. You go to the car lot, you might even test drive. The same goes for shopping around for the best loan. So don't stop with the first approval that you see. You might be wondering why you should shop around. Well, costs do vary by lender. You might go to XYZ lender and they might offer you, let's say, for example, 5% interest rate. But you might go to a different lender and they offer you a percentage less. That percentage does matter. So there are lots of different fees and costs involved when securing a loan. And you want to make sure that you are picking a lender that is best for you. Buyers, it's actually interesting, you know, that buyers who shop around for their loan happen to save approximately $450 a year in interest. I don't know about you guys, but I know I could use an extra $450 a year. So make sure that you are shopping around. So a couple of tips. This is a really good one. I know a lot of us are worried about our credit when we're shopping around because it does affect our credit. But one thing to know is that within a 45-day window, you can put in as many mortgage applications as you would like, and that only counts as one inquiry. So you could, you know, put in 5 mortgage applications within that 45-day window, and that's only one inquiry. So that's really important. And even using a loan comparison worksheet. A loan comparison worksheet just helps you keep track of all of the different costs and compare the different lenders. And if you're not sure where to start, you can always start with a housing counselor that can refer you to a lender who specializes in first-time buyers. I'm going to stop here as well and see if we have any questions.
Yes, we do. From your prior slide, Melanie asked, I just joined, what was the first mistake?
Sure. Oh, go ahead.
No, no,
Go
no. Go ahead, Maya.
Okay, so the first mistake is you want to make sure is shopping for a home before shopping for a mortgage. So basically, you just want to make sure that you get a pre-qualification from a bank or a lender prior to beginning to start that process, because you want to understand what you can afford. You don't want to get disappointed if you're looking for homes that are too out of your price range. So it's really important to understand what your budget is, and then also get that pre-qualification, take it to a realtor, and start the process from there.
Perfect. Any other questions at this point?
Yeah, there's a second one. Does from Shanika, does our work history play a major role in getting approved for a home loan?
The work history does not necessarily. Now, you do need to show tax returns and income, but if you've had different jobs, you just have to make sure that you're letting your loan officer, mortgage professional, understand your 2-year work history, right? But it doesn't necessarily play a huge role.
Okay. Any other questions before I pass it back over to Maya?
Yeah, and one more was so it's best to from Carmelita. So it's best to pre-qualify before looking for a home. Is that correct?
That's exactly correct. I can tell you, I just purchased a home, and that is the very first thing that I did is I called, well, Mr. Cooper, whom I work for, and it takes a while, but you get on the phone, or you go meet with a lender face to face, and you go over all of your financial information, and literally within that hour or so, they can tell you exactly how much you qualify for, and from there you go and look for homes.
I want to kind of back up with my there because I actually made mistake number one when looking for my first home. And so, I went out and I looked at all these beautiful homes, and then I went and got qualified and, was disappointed. So it is very, very important to get that pre-qualification first. And I know that from my own experience. Okay. So I'm going to go ahead and pass it over to mine. For
All
mistake.
right. Thank you, Maisha. So mistake number 3, missing out on first-time buyer programs. So you're only a first-time buyer once, right? And let's say you don't have 20% saved. Don't count yourself out. There are a lot of first-time products available. Mortgages with down payment requirements as low as 3%, down payment assistance programs dependent on the city or state. Um, uh, Again, meeting with a housing counselor to get help. You can also search Google. I searched Google just the other day to kind of look at in my area if there were programs available, and sure enough, I just typed in down payment assistance program and a ton of different programs came up. But working with a housing counselor, they already have that information, so it's really helpful to work with them so that they can kind of guide you through that process. And these programs are intended to make homeownership affordable and achievable, because that's what we want for you. So a couple of pro tips. Again, do your research. We have access to the internet. We have access to just going to Google and enter it. There are a lot of mini programs and requirements. Ask your lender if they offer any special loan programs for first-time buyers. A lot of lenders do. Again, as Maisha mentioned, you want to shop around with lenders. Maybe a lender has a little bit more of interest, but they're going to offer you assistance for your down payment. You have to look at all of those different aspects to understand the mortgage process. And then there's other loan programs to consider. FHA has a 3.5% down payment. That's actually what I got, was a FHA loan. A VA loan, if you or your spouse is a veteran, they offer no down payment programs, as well as USDA loan options. So there's a lot of different options. You just have to do the research. We can pause here and open up for questions.
Yeah, I had a question. Are there any banks that offer loans for foreclosures?
Absolutely. Again, another thing that you would want to do is just type in, mortgage for foreclosure. And I actually saw that question and I quickly did. There are a lot of banks who do that, and there's actually a lot of sites that you can go through who will manage these properties. I think Zoom, which is a Mr. Cooper company. We actually offer some, there's auction.com. So again, I think one of the biggest messages that I want everybody to hear today is do your research. Do we have any other questions?
Yeah, we have another one from Rebecca. What's the difference between a housing counselor and a loan officer?
A housing counselor is generally a nonprofit organization. They are they work directly with HUD in some instances. A mortgage professional generally works for a lender. So, Mr. Cooper, we have mortgage professionals. A loan officer might work at the branch at Bank of America. So the loan officer works directly with the lender. Any other questions before we pass it over to Maisha?
And one more from Brandon. Do
Absolutely.
you know about the SEF grant? If so, what is your opinion on it?
I'm sorry, what was the question?
He asked about the SEF grant, SETH grant.
I am not familiar with that, but I'd be happy to take a peek at it. If we have any other questions, we could move on to the next question.
Okay, so if no other questions for now, I will move on to mistake number 4, which is changing your financial situation before closing. So, you've gone through all of the proper steps, you've gotten that pre-approval, you have even found the perfect house, but then you get overly excited and decide to buy new furniture on credit. No, 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 don't do it. You're so close, you're so close. Don't risk denial at this point. So the period between your pre-approval and your closing is crucial. It is crucial. It is critical. So we want to make sure that we don't add any additional credit at that point. We want to make sure that your income stays the same. We want to make sure that your employment stays the same. We want to make sure that your credit score, your debt, all remain the same until closing. If any of those factors change, it could cause, your interest rate to go up. It could cause a delay in you actually closing and getting the keys to your home, or even a denial of your loan. Remember, guys, when you get that pre-approval, that is based on your financial situation at that moment. And if your financial situation changes, that also changes that approval. That's why it's called a pre-approval, because like any of that can change. So we want to make sure that we keep all of that stuff the same between pre-approval and closing to make sure that nothing goes wrong, okay? And also, did you guys know that lenders are often auto-notified when approved buyers' credit is pulled? So it's really important not to change your credit, employment, or any type of debt within that time frame. A couple of pro tips. Once you're pre-approved, don't make any changes, like I said. Don't change how you're paid even, going from salary to commission. That's a change. Don't touch your credit. This may affect your credit score, your debt to income ratio. And then wait to purchase that new furniture, like I said. Wait to purchase it. We know that buying a new home is exciting. You want to get that brand new sofa into that house, but wait until after closing to do so. Again, hold off on those large purchases like that new car. And remember, this period is only 45 days. Hold out for those 45 days before you make any of those large purchases. And I'm going to pause as well and see if there are any questions before we move on to mistake number 5. Any questions?
Yes, we have one from Teresa. She stated, my ex-husband bought a house in 2009 and I was a stay-at-home mom. I remember as a wife, I did have to sign some paperwork too. We divorced in 2016. Would first-time home buying grants slash programs be available to me?
Ooh, that's a very, very good question. Mai, do you know the answer to that? Mai, you might be on mute.
I'm sorry, what was the last part of that question?
She
Well,
stated that would first-time home buying grants slash programs be available to me?
Well, they absolutely could be, yes. And I also will add, first-time home buyer, you can own a home previously and still qualify for being a first-time home buyer.
Okay. We also have another question from Steven Cruz. When you say don't touch your credit, does that mean making purchases on your credit cards?
Just large
so,
purchases.
oh,
Yeah, I'm sorry, Maisha, go ahead.
yeah, no, I was gonna say the exact same thing. I don't think it doesn't necessarily mean not making purchases on your credit card, but what it does mean is making sure that you're making the payments on your credit card, right? We don't want to make any large payments and then you become behind on that credit card. So, like if you are going out to buy groceries or something and you are still keeping up on that credit card payment, I think that's the most important part, is keeping up on that credit card payment and not putting large sums on that credit card. Maya, do you have anything to add to that?
That's right. And part of the qualification for a mortgage is that looking at your debt to income. So if
Mm-hmm.
you've got $10,000 in debt and then you go buy a car for $5,000, that's going to change your ratios. So that's what the one thing that you really want to manage, is that your debt to income, it stays the same from the time you're pre-qualified to the time that you close on your home, because they will run your credit at the beginning and then at the end.
Okay. We have another one from Nicole. Is it okay to pay off items on your credit report during the pre-approval time period to help improve credit score?
I would suggest doing that beforehand because,
Yes, I was going to say
yeah,
the same thing.
yeah,
Right?
yeah, because what happens is you're going to get pre-qualified based on your situation at at that time. Then, if you're paying off credit card, the lender is not really going to continually run your credit, right? And it's not going to change the terms of your loan unless when you go to closing, right before closing, and they're getting ready to draw up all the paperwork and they run your credit again and they see that large uh, charge, right? It's not going to help improve it. It will just make it worse if you charge things. Maisha, did
Yeah.
you want to add anything to that?
No, the exact same thing. Like, while it's wonderful to pay off that credit, you do definitely want to do that ahead of time, because you could you you could be setting yourself up to pay a higher interest rate when really you qualify for something lower because you've paid a lot of things off, but no one knows that because you're within that time frame. So I do suggest that if you're going to pay off things and get your credit better, that you do that ahead of actually getting a pre-approval. Any other questions? Okay, then I will pass it over to Mike for mistake number 5.
All right. Mistake number 5 is underestimating the cost of home ownership. And why does this matter? Home ownership is about freedom, not being house poor. And when I say house poor, what that means is, let's say that you've taken all of the savings that you have and everything, and you've maximized your budget, and now you own a home and you have nothing left. There's a lot of things that come up through home ownership that it's really important that we're planning for, and that's why it goes back to looking at different programs with lower down payments. Some things to consider are ongoing maintenance and long care, property taxes or homeowners insurance, possible homeowners association dues. So when you think of a home HOA, that might be that might not mean just having a pool on your property or within your your community. You might have an HOA where they're just mowing the lawn, and that could be a couple of hundred or more dollars per month that it is not included in your mortgage, which is an additional outside of what you pay for your mortgage. Higher utility bills. You are living in a 2-bedroom condo or a 2-bedroom apartment, and you move to a 4-bedroom home. Naturally, your utility bills are going to be more expensive. And then the unexpected, right? Water heater breaks, the AC goes out. For anybody that's in Texas, one day with not having an air conditioning can be devastating here. And I will say that when I moved into my home, it's a new build, and the day we moved in, guess what wasn't working? And it was about 95 degrees out, the air conditioning. And thank goodness there was a warranty, but imagine had I drained all my savings to get into this home and I don't have anything to pay for that air conditioning. So those are things that you really want to take into consideration when you're budgeting to determine affordability. So a couple of pro tips: budget based on your new expenses, right? Save early and often. After closing, you should have plenty of leftover emergency fund for new planned expenses. Again, do not empty out your savings. We want homeownership to be fun and exciting, but we also want to be realistic about the expenses that you could have. Research historical amounts of property taxes while looking at properties. One tip that I will share is if you go into a new build, your taxes are paid from previous year taxes, and so if you're going into new construction, there was no home, it was just the land. So that next year you can expect your mortgage to go up because the taxes are going to be different. Ask yourself, if I had a major repair within 30 days of closing, could you afford it? So it's really important to have a little bit of cushion to fall back on to make sure that you're not in a bad situation once you get into your home. So lastly, this is super exciting. You've got this, you know, research, research, research. Don't rush into it. It's exciting, and you get all, you see this home and you want it for yourself and for your family, but really, really do the research and make sure that it's affordable for the next 20, 30 years. Maisha, before we go into final questions, did you want to add anything to this?
Yeah, I just wanted to add that, like Mai said, this is a very exciting time, buying your first home or buying a home at all. And to add to her saying research, I would also say, make sure that you get your finances together ahead of time, before you start going to the different lenders and things like that. Make sure that, if you have to pay off this certain bill, or if you want to pay this off or that off, that you go ahead and do so, ahead of time, so that all of your financials are, pretty stable, so that you don't find yourself in a bind when it comes to your financials or your credit changing in the middle of the process. So yeah, that's all that I have, and good luck, have fun with the process. And do we have any other questions?
Yeah, we have one from Jessica. The only debt I have is car payment, which I was told my debt to ratio is over what is required. Do I need to pay on the principal to qualify or get the debt to ratio low?
No, I don't think your debt to ratio, Jessica, what that might mean is that your available credit, you may not have additional credit cards that have credit available. Like, so for example, if you only have your car payment, that's your debt and that's your ratio. So if you had an additional credit card with nothing on it that was, say, for $500, that would change your debt ratio.
We have one from KD. How much should I have in savings before starting this journey?
Well,
That's a
KD,
hard one.
yeah, that's
that
thank
that
you,
depends.
Maisha. Yeah, that depends, but I'll say what my thoughts, and then Maisha, if you want to also add yours, that would be great. So it's going to depend on the mortgage amount. Okay, so if you're looking at a mortgage for $200,000, we mentioned that the FHA minimum is 3.5%. You're going to need somewhere around $7,000, right? But it could change. If the home is $500,000, you need more, right? If you want to put 20% down and not have different, it just kind of depends. Maisha, did you want to add something to that?
All I was going to add to that was like that is a great question for a loan counselor. That's what they do, is that they help you with those types of things. Yeah, because it just depends so much on, what your financials are. It depends on what the price of the home, like Maya said, and, there's so many dependents on that. So yeah, I would highly suggest that you speak with a loan counselor to see what's your specific situation, is what I would say.
Okay, we have one from Claudia. Are credit counseling programs a negative when rebuilding credit?
No, not at
No.
all. No,
Mm.
it's a wonderful resource, and
Yes.
they have it's the right thing, right?
Yeah.
It's free. Um, it's a great to utilize them. Hmm.
So much goes into buying a home that, especially if it's your very first time, and to have someone to kind of walk you through that and show you what to do, I think is needed. Yeah.
I have one from Brianna. How do I verify if something on the home is still under warranty? What is your advice on purchasing a home that is cheap but needs repairs?
Um, for one, on the warranty, that should have been kind of settled up with the seller at the
Mm-hmm.
time of purchase, right? A realtor can help you. Again, your housing counselors, I'm sure, would be able to assist in that. They're pretty awesome, housing counselors are. Um, and what is advice on purchasing a home that is cheap but needs repairs? I personally, and then I'll let Maisha may have an opinion. I don't have the patience. So for me, I think you need patience. You need to be, you have to be passionate about putting the time into it. It's time consuming. And if you're passionate about it, I think it's a wonderful thing. If you're passionate, Maisha, you've
Yeah,
recently done some
I know we're running
remodeling.
out of I
Oh
know
yeah.
we're running out of time. So the only thing that I would add to that is just to make sure that it's worth it. Make sure that
Hmm.
you have the finances to do those repairs and to take care of it. You don't want to find yourself in a situation where you thought it would cost $100 for this to happen, but it ends up being thousands. So I would just say do really, really good research as it pertains to that. And I know we're out of time. So thank you, everybody.